Hello value investors, thank you for joining me. Today I want to talk about investment strategies. If you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced arguments for the stocks I own. So on Fridays in my marketplace, I talk about portfolio strategy. Portfolio strategy is in essence using psychology to try to beat the market. So in this very short video, we're going to talk about what is value investing. We're going to talk about investment based rules, so using rules to optimize your strategy, and some rules that I use to help me out. So let's get started. So value investing has just become such a nebula, and in fact everything is value investing. So what you as an investor trying to do is try to buy something for less than it's worth. So it doesn't really matter if you're buying something and holding it for 20 years or if you're buying it and selling it that afternoon. I don't do either of those strategies, but everything that you're buying for less and trying to sell later at a higher price is value investing. My holding periods are typically 2 to 3 years, but I can understand there's different strategies in the market, but they all have come down to some ground rules, and that is using rules to improve your strategy. So by that I mean, as the longer you invest, the more familiar you are with what has worked and what has not worked, and this is something that applies to me and you can take away. So one of the investment strategies that I have is, no matter how appealing the idea is, don't put more than 3% of your capital to work in that idea. Because one, nothing is ever certain. No trade is 100% certain. And two, life has a tendency to get in the way. You see now this with COVID, so you have to leave yourself room for doubt or margin of safety. Another rule that I apply is that I let a 60 or 90-day period go through before adding another bit of capital. Why I do that is because you start to think as a business owner the longer you've been invested in that business. So portfolio allocation rules are something that I use and that I tell my members what my strategies are, and you are welcome to try out as well. But it's really about you defining what is your investment style, what is your temperament, and trying to become a lifelong learner, trying to optimize. And this is very, very important. Is trying to adapt as you progress. So let's say you make an investment in X, Y, Z, and this makes a lot of sense to you, and new information is coming into all the time. You can disregard the bulk of the information. But when a company goes through, let's say, an acquisition or there's a quarterly earnings, at that point, you can incorporate that new information. And by incorporating, you can either add to the position or slightly take back from that position. You're not obliged to make a rule. You're not obliged to incorporate that rule. But I do think that having these rules around your investment strategy, staying within those boundaries while at the same time adapting as new information comes in, really helps you out. So if you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced arguments for the stocks I own. Thank you for listening. See you next time.